If expectations go up, it can impact the Fed's decisions too. Trump also received a legal win this week as a federal court allowed his tariffs to stay in effect for now. This is not a good scenario for the dollar, but is a perfect scenario for the other assets that are against the dollar. Welcome to this week's market update. My name is Isaac Martinez, trader and analyst at XChief. In this video, we'll break down the key economic fundamentals moving the markets right now, including inflation data, trade developments, and shifty central bank policies. Then we'll dive into full technical analysis of the dollar index, S&P 500, Euro USD, and Bitcoin using professional tools. If you are looking to stay ahead of market trends with a clear, structured perspective, this is the video for you. Let's start now with the fundamentals, and don't forget that the hours you're going to see are based on GMT -5, which is part of the New York trading session. This week started calmly, but things picked up on Wednesday, June 11th, with a key inflation update. At 7:30 a.m., the US released its monthly and yearly consumer price index, or CPI. This data shows how much prices have gone up for regular goods and services. It's one of the most important indicators for inflation, and markets follow it closely because it helps the Federal Reserve decide whether to raise or lower interest rates. The core CPI, which excludes food and energy, also came out and gives a clearer picture of underlying price trends. The data came in softer than expected, and as a result, the US dollar moved lower as traders started to price in a less aggressive stance from the Federal Reserve. Then on Thursday, June 12th at 7:30 a.m., we get another inflation reading, this time from the producer side. The PPI, or Producer Price Index, tells us how much prices have changed for goods before they reach consumers. This helps traders understand whether inflation pressure is building earlier in the supply chain. The core PPI excludes more volatile items and is also watched closely. Along with that, we'll see the weekly unemployment claims report, also at 7:30 a.m. This tells us how many people applied for unemployment benefits, and it's a good way to gauge the strength of the job market. Fewer claims usually mean a healthier economy. On Friday, June 13th at 9 a.m., we'll hear from the University of Michigan, which releases two key sentiment indicators. The first is consumer sentiment, which reflects how optimistic or worried people feel about the economy. This matters because confident consumers tend to spend more. The second is inflation expectations, what people think will happen with prices in the future. If expectations go up, it can impact the Fed's decisions too. So overall, it's a week dominated by inflation data and consumer outlook, both of which play a big role in market direction, especially for the US dollar, stocks, and gold. Now let's head to the most important fundamentals of the week. The US and China agreed on a plan to ease trade tensions, with both leaders expected to approve it soon. The deal covers key areas like rare earths and magnets, and the US confirmed it will keep allowing Chinese students in American universities. However, there's still no change in export controls on semiconductors. Trump also received a legal win this week as a federal court allowed his tariffs to stay in effect for now, despite a previous ruling that challenged their legality. Meanwhile, the White House is pushing countries to speed up trade talks before a July deadline. So far, only the UK has finalized a deal, and discussions with India are ongoing. And starting June 4th, tariffs on steel and aluminum have doubled from 25% to 50%, which could impact manufacturing and industrial costs. Global stocks are expected to finish the year higher as optimism grows around easing trade tensions. Citigroup forecasts the MSCI World Index to reach 1,100 by the end of 2025, a 3% gain from current levels. They also raised their S&P 500 target to 6,300, citing stronger fundamentals and stable valuations. While Trump's tariffs continue to create create pressure, the recent US-China framework deal and delayed penalties on foreign firms have improved visibility. Lower interest rates from the European Central Bank and better global data are also helping sentiment. Citi is now more bullish on European equities and recommends being overweight in European and Japanese markets, especially in tech, financials, and healthcare sectors. Now let's start with the technical analysis of the most important assets we see every week, and let's start with the DXY, which is the US dollar index. This is maybe one of the worst structures we have seen lately. For now, we could say that based on the downward direction of the volume, which is this indicator, as you can see, it is likely for the DXY to continue this structure. So if this happens, I will try to find new trades in the direction we see. So the first objective for me, at least for this week, which is not the best scenario for the people who has dollars right now, would be to try to find 98.351. This is my first objective, and the next one, which we have here and is also related to a strong support of the DXY, is 97.921. If the price goes down and reach this target, it is important for the DXY to try to make a double bottom here, which is a pattern that is highly probable to create a reversion, to create a reaction from this asset. And if we don't see that reaction, it is possible that the DXY continue falling. This is not a good scenario for the dollar, but is a perfect scenario for the other assets that are against the dollar. For example, the Euro USD that we are going to see soon. If you are considering bullish trades for this week, I will take into account this fair value gap that is located here. Let me show it to you. And the 50% of this fair value gap is located at 98.836. After this point, if we see a strong recovery from the US dollar index, it is possible for this asset to try to recover to the last high, which is located at this point of the price, 99.1193. I will just leave these two targets, these two upside targets for this week, because it'll be difficult for the US dollar index to recover strongly. So I won't consider strong bullish movements. Let's continue with the S&P 500. This story is completely different from the US dollar index. As we can see, all the bearish targets that we established last week were only established as an exercise, because we don't see that the S&P 500 wants to have a pullback. But if we don't see a downward movement in the next days, it is highly possible for the S&P 500 to reach a new all-time high. So targets for this week for the bullish traders will be 6,144. If you're trying to trade the pullback or a correction from this asset, I will consider $5,968. And if something bad happens with bad fundamentals, with aversion to risk, I will consider the first one located at 5,730, next one 5,544, and the next one 5,433. The next one is Euro USD. Obviously, we have seen this movement from the DXY, the US dollar index, and this is a easy movement for this asset, because if we see a downward movement from the US dollar index, for sure we will see a good recovery, a good upward movement for the Euro USD. So if we are considering that the US dollar index will continue to fall, I will suggest only bullish targets with this asset, and this means that I will try to find the next target here at 1.15304 and the last one at 1.15732. Difficult for the price to make a downward movement only if we have a good fundamental for the US dollar index related to the economy of the United States. Okay, well then we will have a pullback for the Euro USD, but if not, please take into account that the next movements will be more likely to be upward movements. Now, on the other hand, if you are bearish with the Euro USD, I will consider the last targets that are located here, 1.14252, 1.13748, and after that we can consider other liquidity zones at 1.13573 and the last one 1.13127. And yes, these are good points to try to consider manipulation, and after this try to trade a reaction, but take into account all the things we were saying about the fundamentals, because if that doesn't happen, we will see just the continuation of this structure, which is an upward structure. Now for Bitcoin, I want you to understand that the last movement, the last pullback we have from Bitcoin, which is all this movement, you need to understand that here we had a low that was manipulated in this last movement. So this means that Bitcoin now has enough gas to try to make a new upward movement. The targets we are trying now to seek with Bitcoin are upward targets. So the first one will be this 110,829, and the last zone will be $112,000, which is basically the last all-time high. And if you are bearish with Bitcoin, which is not a good idea considering that we have a bullish structure with this asset, I think these are good points for you. The first one is $105,375, and the last bearish targets for this week, I will consider the same point of the price, $100,700. If you found this analysis useful, don't forget to like the video and subscribe to the channel for weekly updates. And if you haven't already, create your free trading account with XChief today and take your trading to the next level with institutional grade tools and real-time market access. Thank you for watching and see you next week.